The other night, Donald Trump met with Xi Jinping in Busan, South Korea. And both sides are calling it a breakthrough. At this meeting, the US and China agreed to cut taxes on trade, restart buying on soybeans, allow mineral exports, and make efforts to stop drug chemicals from spreading within the United States. But how real is this deal? And who will actually benefit from it? I'll break it all down right now. Now, remember, if you want regular market updates on the top headlines impacting your portfolio, subscribe with notifications so you don't miss any of it. So the meeting ran for an hour and 45 minutes, with the handshake alone taking well over 20 seconds. After, in his usual fashion, Trump called it amazing. This meeting included an announcement of a 10-point tariff cut, moving current tariffs down from 57 to 47%. In return, China agreed to resume major soybean purchases from the US farmers, delay on new restrictions on rare earth exports for 1 year, and increase enforcement against fentanyl precursors. Now, what are those precursors? Those are the chemicals used to make the synthetic drug. Basically, tariffs down, soybeans up, rare earth paused, and fentanyl is technically being tracked now. Now, I know what you're thinking. That's great and all, but why does this really matter? And more importantly, why should I care? Well, to simplify, because tariffs around 50% have been a hidden tax on importers and everyday consumers like you and I. And cutting 10 points of these tariffs, well, that eases some of the pressure on prices, specifically those on electronics, clothes, and machinery, but we also have rare earth minerals. Honestly, I don't love that name that much for them because while these minerals are called rare earths, they are not so rare. But that's beside the point that I want to make right now, because these rare earth minerals power everything from EV motors to smartphones to wind turbines to even F-35 jets. And a 1-year pause on export limits means less supply in this chain. Now, in the soybean matter, while it may sound kind of boring, the soybean market, it's actually huge in the Midwest. If China starts buying again, US farm income rises. So that means barge traffic on the Mississippi picks up, and small town economies get a little breathing room as well. As an added bonus, China said they'd increase also their fentanyl tracking. Both leaders said they'll continue their dialogues with potential visits occurring in 2026. So now on to how all of this affects your portfolio. In the short term, this meeting is actually a relief in value for the market. For retailers, for importers, lower tariffs means more margin room and pricing more flexibility. But for electronics and semiconductors, rare earths, they are always within that risk because we have chip export controls and they are staying for now. For the farm belt, we see soybean demand means higher prices and better cross margins. But for US logistics, more export leads to busier ports and also busy railroads. But what about these renewables and defense? Rare earth supply helps monitors, they help turbines, as I said, and guidance systems. So if you're invested in any of these areas, you may be happy about this because this might explain some of the recent price action that we've been seeing across these stocks. But who is losing here? Well, the tariff cut is only partial, meaning tech restrictions on GPUs and AI hardware are still in place. And the rare earth pause is temporary. Remember, only 1 year. And that fentanyl tracking, it only depends on how much China actually enforces it. But it would be unfair to look at all of this in just one short term. What's more important is if we zoom out and look at the big picture. Overall, this deal gives both countries a little bit of breathing room. For Washington, it cools inflation pressures without losing leverage. But for Beijing, it stabilizes their supply chains and shows reliability on critical materials. But don't confuse this with a peace treaty. Those core fights like semiconductors, data rules, and security in the Pacific are still there. So yeah, it is less of a reconciliation, but more of a truce with benefits. Anyway, something that a lot of investors may not realize is that this is the first time that Trump and Xi met face to face since 2019. Back then, we had that phase one trade deal and a lot of tariff drama, but now the whole landscape is totally different. Supply chains are more secured, and tech is the main battlefield, remember. So this rollback is smaller in size, but touches new issues like rare earths and fentanyl control. With all that said, there is some fine print to this deal, and that we really need to keep in mind. We can't forget about this because who will verify to ensure that China is implementing their fentanyl controls? Is that 47% tariff rate permanent, or will it expire next year? Does this pause cover the processed magnets or just the raw ones? And also, will there be any movement on tech control, such as the tariffs on AI chips and lithography tools in the future? And even though Trump and Xi teased for a possible meeting in 2026, will these meetings actually take place? That's the real question out there. We see a lot of flashing headlines and tons of details missing currently. But as if US-China relations continue to develop over the next few years, there are a few things you should keep an eye out for that will for real impact your portfolio as well. Well, for one, I am personally curious to see how USDA export bookings for soybeans react, and how is China now actually going to buy them now that they've been consuming things from Argentina. And I'll be making sure to keep an eye out on how these custom data for rare earth shipments behave, because these show if the pause is real or not. Also, Treasury and Commerce updates will be really, really relevant in explaining how the tariff cut rolls out through the entire economy. And finally, I know I keep laboring on this point, but I can't stop thinking about these chip export rules. So far, they haven't budged, but maybe that will change. So make sure you keep an eye out on this data with me so we can see this breakthrough actually sticking into the entire economy. Bottom line, this Trump Xi Jinping meeting was less of a breakthrough and more of a tactical de-escalation from real economic impact. But it's certainly not the end of this US-China rivalry. Short-term relief for your portfolio, but far from a really long-term solution. Anyway, for more updates on this and other important stories impacting your portfolio, subscribe with notifications, and I will see you next time.